Hi, stock explorers. Welcome to Explaining Stocks to 5-year-olds. Today, I am joined by Will Preston, the portfolio manager of Fenimore Asset Management's Dividend Focused Fund. Thank you for joining us today. How are you doing, Will?
I'm doing great, Nicola, and thank you for having me. Pleasure to be here.
No, anytime. I guess to kick it off, it'd be really interesting to know how you first got started in investing. Like what sparked your initial interest?
That's a good question. And thinking about that, it's hard to actually pinpoint something like any type of childhood hobby. You don't actually know what was that event that sparked your interest and got you into it. But I can recall what I would say is my earliest memory that I remember of sort of being gravitated or interested in stocks. My father, like many parents back in the day, he read the newspaper daily, and I would go down there, and as a 7 or 8-year-old boy, I would go and grab the comics, the sports, but I always grabbed the business section. And I had no idea what I was reading. I just knew that it published stocks and stock prices. And I had this idea. I kept a notebook. And in this notebook, I would write down the date, the ticker of the stock, and whether it was up or down. And I felt like, so you can tell this is very much pre-internet days without any history to go back to. I felt like if I recorded all these prices and kept a long enough journal, I would be able to go back and say, oh, on the first of this month, the stock always goes up, or in May of every year, the stock goes up. So you can see how naive I was about how the market worked. But that's the earliest memory I've had. And it's only an interest, obviously now a career that I grew to really like.
That's awesome. So I guess how did you initially get started with investing? Like, did somebody help you along the way? Was it like, what age were you exactly?
Well, I started actually personally investing probably in high school, and that was my parents, giving me a little bit of money so I can try it out. I would be very, very embarrassed as a professional investor to publish my personal account trading history from my years of 13 to 17 and the things that I attempted to invest in. But getting into the industry professionally, I had a very unique advantage, I think, which is I knew what I wanted to do. And, this was something that as a high schooler, I was pretty much set on getting into the investment industry. I never knew exactly specifically what type of investing, but I knew this was a field that I wanted to get into. So I spent a lot of my external reading time reading investment books. So when I'm 16, 17 years old and have some time from not playing sports, I was reading investing books. And then going into college, not having to figure that out, but know it, helped me tailor my work experience, those internships you do in college, to be specifically focused on investments. In fact, one of the internships I did brought me back to where I actually work today. So I would say that, breaking into the industry, just knowing that I wanted to be there really helped. And since then, my whole professional career actually has been spread across 3 different stock research shops.
That's fantastic. And it's great to hear of somebody who went back to their roots in their internship. And I feel like everybody starts somewhere, and we all probably would feel the same about our personal investment portfolios, honestly. I guess going back to the version of you in elementary school, what traits of a younger version of yourself do you think make you a successful investor today?
Oh, yeah. So I think there's 3 traits that come to mind. The first is just really strong curiosity. And, by that, I mean, you get told something, but you always want to ask the how or the why. Why, the sky is blue. Why is the sky blue? The grass is green. Why is the grass green? And having that level of curiosity, I think really would help, has helped me as an investor. And I translate it to an example of the business world, which is you're driving in the car with your parents. You come up to a red light, and you see across on 2 streets, you see a Rite Aid and you see a CVS. And to anybody, to me today, they look like the same exact store, different brands, selling the same products and services. And yet one of them is a $100 billion enterprise, and the other one is a bankruptcy risk. And wanting to know why that is a great example of curiosity for an investor. The second trait is a great work ethic. I think this is a function of, it was something that was instilled by my parents. My mother worked, 2 jobs for the vast majority of my childhood to make sure she provided for all of our needs, not our wants, but our needs. And I also grew up as one of 6, including 5 boys. So it's very competitive childhood. So you needed to have a good work ethic if you wanted to stand out. The third trait, and sometimes I think to a fault, you can say that but to be an optimist. And I think if you're investing and you want to be a successful investor, particularly over the long term, there's always a million reasons in the news to get concerned, to want to take your money out from investing. But if you can maintain sort of that optimistic view on the future and the prospects of companies in America and businesses, then I think that is a great trait that will serve investors very well.
That's fantastic advice, I think. And it's really so true. It's like it's stuff you see and stuff that's all around you every single day, and just being curious. And I feel like asking the why is such a big thing that a successful investor needs to do all the time. And it's something that I feel like you specifically and Fenimore, you guys are just so great at like questioning the why behind things. And it's something that seems so simple to kids, but is actually so instrumental and valuable in becoming successful. I guess the next question I have is, you're a portfolio manager, and many of our audience members probably don't know what a portfolio manager is, what they do. Do you mind walking them through what a portfolio manager is and what you do, what your day is kind of like?
Yeah, no, that's a great question. I think when you talk about portfolio manager, you really want to understand what an investor does. What is an investment research analyst? Because a portfolio manager is just an extension of that. So an investor, we're spending our time, 80% of our time reading, reading about our companies, the industries, market trends, just trying to find those insights, answer those questions of why and how things are, trying to, really help us in terms of evaluating what types of businesses we want to invest in. And then there's writing, a very underestimated skill. So if you notice, the first 2 things I said too are reading and writing. There's nothing mathematical about picking stocks in that sense, and it is a part of it. But the 2 big things is reading and writing. But with writing, it's really about being a great communicator. I think when you have investors, you have clients, people who entrust you, give you money to help them invest, being able to communicate well why you're doing something, how you're doing something, as well as just holding their hand along the way and help explaining things, because it can be very it can sound very complex, things that don't need to be. So so we do reading, we do writing. I do a decent amount of travel too. One of the things we do, very fundamental research, which means we try to find our stocks by studying the companies, not by trying to figure out what are the great trends that are going to shape the world. So we start with the company first, not big picture, which we may also call the macro. And so knowing that, we get out on the road, my boss, our CIO, always has a saying, you don't learn anything new at your desk. So get out there. And so we get out, we visit the companies, visit their stores, visit their manufacturing centers, and just trying to get those insights. So those 3 buckets really encompass an investment research analyst. That's what a person who's picking stocks does with a lot of their time. So the extension, it's a small part of the time as portfolio managers. If I come up with stock ideas as an analyst, I then need the portfolio manager's responsibility is to make the buy and sell decisions, to put it into practice, to say, okay, this is the right one to buy, this is the one to sell when we do it. And so that's really, it's really just a function of your investment research, capabilities, and you're just doing a little bit extra on the portfolio management side, where you're actually you're putting the investment strategy into practice.
That's fantastic. And it seems just awesome from a kid's perspective, right? Because you're traveling, you're reading, you're writing, and then the extension is you're putting that stuff into action. You're actually determining buys and sells, and
Mhm.
it's just the natural evolution of that. So thank you for explaining that to the kids in the audience. That was very well said, Will. I guess today we're going to be talking about industries. So could you please explain an industry to the kids in the audience today? And it could be anyone that you have picked out, because I feel like this is something that they probably haven't heard before from me. I talk a lot about like companies and things like that, but I have never fully explained an industry to them yet.
Oh, well, I'll start because I had just mentioned too how we invest is we start with the company. So, but the industry does matter. And what is an industry? And an industry is a group of companies that sell similar products and services. They typically compete with each other, though not necessarily. And examples are always best. Think of the restaurant industry. If you heard restaurant industry, this would be all of the restaurants that you could possibly go to for breakfast, lunch, or dinner with your family. And they are all selling you the same thing. They're selling you food or drinks, and they're competing for different parts of the day. Maybe breakfast, a diner on the breakfast side, or a steakhouse on the dinner side. So you have an industry would be shaped in that sense, that these are, if I think of a company and I think of who else is trying to sell me this product or service, that they would together comprise the industry.
That's awesome. And I feel like everybody you've worked in various parts of the investment business. So I'm just curious what your favorite industry is, if you have a favorite at all.
I do have a favorite industry right now. It changes. There's a lot of great industries out there, but my favorite right now is an industry called HVAC. And you said, what is HVAC? Well, HVAC stands for heating, ventilation, and air conditioning. So HVAC is another way they would say this industry. And what is HVAC? What is heating, ventilation, air conditioning? So think of indoor air. So right now we're sitting indoors. Where I am, it's still cold outside. In fact, you can see a little bit of snow over my shoulder. Well, when I come indoors, I want the temperature to be warmer inside than it is outside. The HVAC industry is responsible. That is the industry that makes up the solutions, the units that help heat up your house in the winter, or in the summer. If you think you're outside playing all day, it gets real hot, sweaty, you want to step in, you feel that cold blast of air and that air conditioning, how refreshing it is. Well, that's the HVAC industry. It's made that unit.
Oh, that is fantastic, and something I'm personally really interested in, because I'm searching for homes. So I've been learning along the way. I guess you kind of walked us through what the companies in this industry do. Why do you like this industry versus others?
Yeah, well, I think when you think about what they do, I think I want to expand a little bit to help dive a little deeper into that, and then it will help explain what we like about this versus others. So if you think about indoor air, and any building needs an HVAC unit, that means your house, as you're out living houses, but it also means like a Walmart building, these massive, massive facilities that would require a much more complex solution than a 3-bedroom home would need. So this industry has two distinct parts: the home, the residential side, and then the commercial side. And I think it's easier, for simplicity's sake, let's just focus on the residential side, because it's the way that we interact with the industry, and it's a little bit easier to understand. So inside this industry, there's 3 players, I would say, providers of parts. There's, on one end of the spectrum, you have the companies that actually make the units. So the ones that actually manufacture an air conditioning or a furnace or a heat pump. And then on the very far end, when, Nicola, if you had a house and it's 98 degrees outside and sunny, and then all of a sudden it got really hot, and you're like, wait a minute, let's go turn the air on. You realize the air conditioner doesn't work anymore. You have to call somebody. You need somebody to come out and fix this. So you call Nicolette's Heating and Cooling, and a contractor will show up. And so the contractors are the way we interact with this industry. And they would be the ones who would repair, replace, sort of sell you a unit. Now, it would be very difficult for all of the manufacturers of the units to have relationships with all the contractors, and all the contractors to have relationships with all the manufacturers. So sitting between them is a business called distribution. These are distributors that basically take and inventory the units and then sell them out to the contractor. So you have those three levels. So that's a good understanding of the residential side and what are these companies and what do they do in here. When you talk about what do I like about this, I think there's three things that I really like. One is, have you ever gone into a building? If you had to think, when's the last time you went into a building that it didn't have heating or cooling? And
Actually, recently.
Yeah. Recently? Okay.
Well, it was a bad situation, but we will not talk about it.
Was it a broken unit? Was that why it was?
It was, yes, it was a fixer-upper house.
Okay. So fixer-upper, it certainly would have or would need it, especially if you were going to live in this house at some point. But I make that comment because the thing about this industry is there's a massive installed base. So there's millions and millions of units, hundreds of millions of units that are out there and installed in homes. And what does that mean? Why is that good for the industry? Well, these are all units that at some point have to get repaired or replaced. So there's this giant ocean of demand. So if you're operating the space and you just have all this demand there, which means your business is going to make revenue, you're going to have somebody to sell a product to. That's a huge positive. So that's one thing I like about the HVAC industry. The second thing I like about it is replacement. When you buy a new unit, it's usually done under emergency. And so what do I mean by that? So you'll never wake up. I've never woke up. I'll never wake up, decide one day, I want a new air conditioner. You don't. But if it's 98 degrees outside in the middle of summer and it stops working, you decide, I want a new air conditioner. And when the contractor who sells it to you shows up at the door and they say, okay, we got to give you a new one, you can either wait 6 weeks and get one for $2,000, or I can give you one tomorrow for $3,000. You're going to find a way to make that $3,000 work into your budget. So they get really good pricing because of the way that these things are replaced. And then the third attribute is just this huge tailwind of consumer demand and government regulation supporting better efficiencies. And these units use up a lot of energy, electricity. So they want to have them become more efficient so they have a lower carbon footprint. There's a term called SEER, which means if you think of a car, and your car, you have gas mileage, miles per gallon. How many miles per gallon do I get? And everybody wants a car. They can get more miles with less gas. It's better for the environment, and it saves you money in your pocket. So the SEER is the same thing. How much air conditioning can I create for as little amount of energy I use? And so they keep raising that level, which makes the units more expensive, so better prices, but also drives demand. People want more of it. So those are three things that I love about this industry.
I think that's fantastic. And it's something that every home needs. Like it's a necessity. You cannot be living and functioning in a home without it. So I feel like those are the types of industries that are so critical to everyday people, everyday society. And I think something that you said earlier was really, really great, in that you were saying how it's replacement upon need, and you never know when those needs are going to come up. So you always have to have room in your budget for these surprises that may come up or may not come up in replacing these things. And I just think, wow, it's just so powerful. And it's something that a lot of people wouldn't think about, investing in heating, because you just see it as expected. It's a necessity. And I feel like even when you're a kid, you're like, oh, let's put the AC on, or you're not thinking somebody has to pay for this.
Yep.
And somebody's making money off of it. And that's an entire industry of people and careers. And it's much more massive than that simple little thing of you running in from it being hot outside and you want the AC on.
Your parents will remind you
Yeah.
that it's running, the cost.
Yeah, the parents have the friendly reminder of saying, turn the heat off, turn this off, so
Yep.
you're not running up the electrical bill and everything else. So I think that's absolutely fantastic, and you explained it great. I guess, what advice would you give your younger self about investing in this industry?
That's a good one. I think the way I would frame it, not so much about this industry, but it's just a better observation because I have invested in this industry, and it goes both ways. So the first part of this is when you find a really good industry, one of the most important things is just get invested in the industry. Oftentimes there's going to be 6, 8, 10, 12 different types of companies that participate and are all probably quality investments. And if you spend a lot of time debating which one's the exact right one, when, one's always going to do a little bit better than the other, but probably 5 or 6 are going to do still great. And having just invested in the industry is the most important thing you could have done. But that works the other way too, which is when you have a really bad industry, you really shouldn't spend time trying to find who the best operator is in that industry, who's the best company, because it's probably not going to work out. And I think of the example, it's the everyday example. Now we've used the term already, newspapers, but this was an industry that used to be massive with huge franchises and local, huge brands in local markets, and with digitalization, the internet, and where we get our news from, it's just shrunk very, very quickly. And it didn't matter who you invested in, you didn't do well. It could have been the best newspaper operator with the best journalists. It wasn't going to work out. So if you have a great industry, don't waste too much time finding who's best. And if you have a bad industry, don't waste too much time finding out who's best.
I think that's great. And it's also going back to what you said earlier, the why. Like, why is this industry necessary?
Yeah.
And I feel like that is such a trait for good investors to have, is the industry may be necessary today and it might not be necessary in the future. And I feel like you guys as kids in the audience have the best insight into what's necessary for the future, because you're the ones that are going to be living in the future. You have the longest timeline. So Will, thank you so much for joining today. Given your experience, do you have any advice that you'd like to share with the audience before we close out?
Oh, well, yeah, it's great. This has been great. I was thinking about this, and I think there's 2 things. One is, and we could, Nicola, if you ever want to do a huge podcast on the power of compounding, I would say, get that to work, and you tell the audience, look it up, read about the power of compounding and how that benefits somebody, particularly over long periods of time. So get invested early, start early, figure out, and like I said, I made a million mistakes, and I'm still going to make a million more mistakes. Hopefully not not the same ones, but it's just part of it. And I think the earlier you can learn these mistakes and earlier you can learn about investing is important. And then get that power of compounding, you get invested and get the benefits of that. And then just from a wisdom perspective, it's kind of funny. I had a phone call with an old grade school buddy. We still keep in touch, try to catch up a couple times a year. And one of the things we do when we talk is we talk about books we've read. Hey, what are you reading? And it always makes me go over to my bookshelf and try to rethink, what was I reading? What have I read, and what's worth sharing? And I had this call on Tuesday last week, and I saw there's a biography I have. It's an NFL running back, and it was probably one of the first. I'm a huge football fan, and it was one of the first. It might be the first book in my library, but it was definitely the first book where I bookmarked a quote. Like you highlight and you save it. And I remember that was the very first one. So this was one of the high school books that I've kept. And he had a thing that I think helped me a lot as a young malleable person interested in investing. And the summary of this paragraph was, it doesn't matter where you are, just stay in the race. And what he means by that is, if you have a goal and you have your sights set on it, I think a lot of times you can be discouraged when you see people who are maybe further along than you, or you're maybe had some roadblocks and you're not quite where you wanted to be. And the importance of that is but you can't let that prevent you from still trying to attempt a goal, because the only thing that with certainty will prevent you from not achieving that goal is quitting the race and getting out of it. And I love examples. When I was at college, the first year I applied to be in the investing club, I was rejected. And it's such a meaningless thing today, but at the time, that was what was a bigger indictment on my career as an investor than not being good enough to make the student run investing club. But that wasn't a deterrent for me, because imagine if I gave up there just because I wasn't where I wanted to be. I didn't have the credential, and I didn't. So I always tell people, it doesn't matter where you are in the race. As long as you're in the race, that's the most important thing.
Oh, that's fantastic. I think that's probably one of the best things I've heard, and it's so valuable. Thank you so much, Will. I appreciate you joining, and I'm sure our listeners, they've learned so much today, and they thank you as well.
Awesome. Thank you, Nicola. Thanks for having me.
Anytime. Bye-bye.